Hi, on a Monday, and today is slightly different because I'm broadcasting it from my business page. Before I know I was doing it from my personal page. We do have a really good feedback on that. But now I just decided for business, I just want to specifically for people who liked my Facebook page. And also, I think it's more you guys, if you like my page, you might be interested in like a tax, take out of your tax bill or anything like that. So I think it's probably more beneficial just broadcast from my business page. Okay, but of course, I will also share this video via my personal page as well, so you can always watch a replay if you missed it. Okay, so today's topic is about paying tax, and it's basically about how tax are collected, and in particular, lots of people have questions about their tax code. Most of people are saying if you are an employee, your tax bill has been taken care of, but then it's not always the case. There are people who has like several employments, and they get really confused about their tax code. And what's even confusing is, especially because I work with lots of medical doctors, they are like when they're in training, they are on sort of rotation. So they might be in one hospital for a couple of months and then change. So their tax code is always being messed up. And I would say most of the HR departments, perhaps they made their tax code wrong. So it ends up they might have like underpaid tax and overpaid tax like for the next year, and the tax code is always looks odd. And also for medical professionals, most of them have the medical expenses they can claim. Either they have claimed or they have not. Especially if you have something to claim and then you have underpaid tax, overpaid tax, that makes things even more confusing. So I just created this video as a general guide to help you understand your tax code and how different taxes are collected differently. So today, particularly, we are targeting our income tax. We're not targeting on any sort of capital tax or value-added tax. These are different. So particularly, we target your income tax, like earned income, as well as for some self-employed individual, or if you're running a limited company, when and how your tax are collected. Okay, so first of all, I just like to remind you of this quadrant. So there are four cash flow, it's like four type of people, how they earn their income. So employee, it's like majority of the time your taxes are collected via your PAYE tax code. It's like being taken care of. But if you fall into any of this category, in most of cases, you have to declare like a self-assessment, like a tax return. And I think if you already done it for a couple of years, you know you have to do it by January each year. So first of all, for employees, I think most of the time it's like you have to you have the tax code, and then your tax are collected by the tax code. So we focus on this first, and then we talk about the rest of people. If you do feeling a self-assessment, and you might be wondering why you are paying tax twice a year. For instance, I have a client, she had a rental property, and last time we did a self-assessment, and that was the first time she had like a good profit, made a good profit from the rental property, and then it's end up she has to pay tax twice a year. So that's had a surprise as well. So I think this episode is really bring together all this confusion, and then I give you general guidance. But of course, if you have something specific that you want to know about, some advice that's more tailored to your situation, so be free to let me know and just personal message me, or you can call me. Unfortunately, my number you can call me now. You can call me via the Facebook page. So yeah, you can always get me. Okay, to start with, let's just go through some tax codes. If you're already familiar with it or not, we just go through the main guidance. Okay, so first of all, the most common tax code for current tax year, that is 1150F, what does that mean? So for 17, 18, your tax-free allowance, that's 11,500. So that code comes from 11,500 divided by 10 and followed by letter L. So this letter L means you always have an available tax-free allowance, or we call it personal allowance, to something available. So that is a normal tax code. And if you see the tax code on your payslip or your documents is this, and you have nothing to worry about, your tax code is normal. Okay, just for your idea, because different years, the personal allowance is different. So because currently we're dealing with the 16-17 tax return, so when you see your P60, your tax code is actually last year's. So last year's normal tax code, that is 1100L, because last year's personal allowance, that was 11,000. So just to make you aware. If you see why it's not 1150L, and that's actually last year. Okay, so each year can be slightly different. Okay, for some people, you might see your tax code was something like this. It's instead of some numbers followed by L, you have letter K, something start with K. Okay, so what does that mean? That means, K300. Let's just say K300. What does that mean? So that actually means something you don't really have the full personal allowance. Okay? So K300, that means your tax will be collected. You will be collected additional tax. And you might have some underpaid tax from previous year, or you have like taxable benefits, like if you receive health insurance from your employer, or your employer say pays your gym membership and pays your travel bill, which are taxable benefits, then your tax code might look something like this. Okay, it might be K50 or K something. So K300, what does that mean? Is your tax will be collected as if you have additional £3,000 taxable income. So 300, okay, so if you add another zero, that's 3,000. That's just say you have additional 3,000 taxable income. Okay, so your tax will be collected as if you have additional 3,000 taxable income. So normally, what will happen is, it's not everyone's tax code will be like this. The Inland Revenue will send you the letter to explain why your tax code is like this, and they will have a detailed calculation. So if you're satisfied with that, that is fine. But if you are in doubt, be free to contact an accountant or contact myself. So we just make sure your tax code is fine. So normally, if you do have underpaid tax from previous year, your tax code can be something like this, because it just save you hassle to file a tax return, or you don't have to pay the tax physically. Normally, if your underpaid tax was under £3,000, that can be collected by tax code. But in some cases, if your underpaid tax is more than 3,000, what you might do is you just pay some amount. For some people, if they can't afford paying everything in one go, they can do like pay some amount upfront and then the rest collected by tax code. So that's something you can do as well. Of course, there are different cases, like Inland Revenue treated differently. I think when it comes to paying tax, if you do have a tax bill and you can't afford it, then really talk to the Inland Revenue and see what are the options available. So one of the options might be this, or you can settle by some payment plan. Okay, there are some options. So if you do have, if you are in that kind of situation, yeah, there's no harm to ask and do talk to the Inland Revenue. Okay, so there are some, of course, there are a couple more tax codes. Some of them are just the letters. Okay, so One of the tax code, perhaps maybe some of you have seen this, is called BR. It stands for basic rate. So normally it's like if someone has a second job, and then from your first job, your personal allowance is used up. And the second job, you don't quite earn like more than on the like high rate yet. So everything you earn will be deducted by 20%, because 20% is exactly the basic rate. So just like if you earn like say £1,000 and then you pay tax £200. So it's just like that. Everything you earn will be deducted by basic rate. Okay, so that's normally for people who have second job. What if you have a second job, like the first job already earning like hit a high rate, and the second job obviously you have to pay 40%. Zero tax code will be something like this. D0. That's not DO. That's D0. Number 0. Okay, so that's 40%. Okay, so yeah, if you have a second job, that's his 40% tax bracket, then it will be like this. And there's another bracket which is if you well, for people earning more than £150 a year, then that's additional tax brackets. That's 45%. So that's tax code D1. So letter 1. Okay, that's additional. So of course afterwards I will post all these pictures on as a picture, like post everything on Facebook, so you have all the guidance. And just so you know, I also designed the quiz because it's a so important part. I know there are lots of tricks, lots of things about like saving tax or everything like this, but these are how tax are collected. It's actually very basic, and I think it's important to understand. That's more for you to gain peace of mind, and you know what's going on with your tax bill. Okay, and I think for some people, of course, if you have tax code like this, you might be laughing because it's no tax. NT stands for no tax being deducted. Okay, that's quite rare, but like say for instance you're not even UK resident and you don't subject to UK tax, then perhaps you don't have any tax being deducted. So if you have an NT, then that's no tax being deducted. You might celebrate that. Okay, and there's another tax code, especially for the high earners. Like if you're earning 150K a year, because when you are earning more than 100K, you start losing tax-free allowance. You start losing personal allowance. So that means every extra £2 you earn above 100K, then you lose £1 personal allowance. And also, just so you know, you will lose your personal allowance completely for 17, 18 if your salary is more than 123K. Okay, so 123K. Okay, and then if that's the case, your tax code will be something like this. So there will be no tax-free allowance. So 0T, that's actually zero tax-free allowance. Okay, I know sometimes it can be a bit confusing why this letter comes from, like, but then you know it's important. Of course, the government has put all this on the website, but just for you to have a visual understanding, I'll post on Facebook as well. Have my version. I hope that's help you understand this better. Okay, so these are the tax codes. I hope that gives you some general guidance, but if you have there are actually more types of tax code than this. If you have anything like specific that you want me to cover, or you want to talk to me personally, be free to let me know. Okay, so if your tax are collected by tax code, then we call it deducted at source. So in majority of the cases, you don't have to fill in self-assessment. But then just come back to these quadrants. So if you're B or S or I, because you do have you do receive income that are not taxed, so you have to self-assess your tax. So that's why we call it self-assessment. Also, we call it personal tax return. And for business owners or even some self-employed individual, if you want to be tax efficient, you run your business through the limited company. And limited company is a separate entity from yourself. So limited company has its own self-assessment as well. We call it corporation tax. Okay, so these are the taxes that are self-assessed. Okay, so you might be wondering why some people have to pay tax twice a year. That's if they have more than 20% of the tax. So that means if your tax bill, like in the end, after you finish your tax return, less than 20% of your tax are collected by tax code, then you might have to pay tax twice a year. Okay, so we call this second payment on account. I think if you have been doing that, you are probably familiar with that. Like the accountants, even if I'm doing your tax return, then I already explained why you have a second payment on account. I think in particular because last year the dividend tax rule has changed. So for some director-only company, like the contractors who are running through a limited company and has taken dividends, you might have second payment on account. And for this, I would advise you to do your tax return as early as possible. It just make sure you have some funds to prepare, because what does that mean is you are required to pay half of the next year's tax bill upfront. So that's probably just for you to prepare for the cash flow. It's probably for the tax bill wise, tax liability wise, for the calculation probably it's fine, but then it's just for you to plan your cash flow. Okay, so second payment on account, just to recap. So if less than 20% of your taxes are not less than 20% of your taxes, I know it's confusing, less than 20% of your taxes are not collected through the tax code. So you might have to pay tax twice a year. Okay, so I just draw this timeline here to help you understand what does that mean. So basically, just to recap, personal tax year that runs from 6th of April to 5th of April next year. Okay, so 16-17 tax year, that's from 6th of April 2016 to 5th of April 2017. And of course, 31st of January 2018, that's a deadline. You have to file your self-assessment and pay your self-assessment payment, like your income tax. And then if you have a second payment on account, then the deadline is 31st of July 2018. So like July 2018, if you're paying some money, that's towards your that's as a result of your 16-17 tax calculation. But then what does that mean? Is actually what's actually you're paying. It's like if say you have to pay, we just you use a very understandable number. You have to pay like 5,000 this year. Your tax liability is 5,000. And if that's the first time you're paying second payment on account, then what you have to pay is like 5,000 plus 50% of 5,000. So you have to pay 7,500 in total by 31st January and 2,500 by 31st July. So what does that mean is you actually have to pay next year's tax, 50% of next year's tax upfront, and revenue assesses by assuming that your 17-18 tax bill is also 5,000, and you will have to pay half of it upfront. So if you are the first time doing the second payment on account, then you might have a sort of cash flow hits. So that's why we advise, this is a deadline. You can start doing your tax return from this date. So of course, at the moment, it's still early stage of preparing your self-assessment. So if you are the director of the company, then do be careful. I do suggest you to do your tax return as early as possible, because if that's the first time you have to pay the second payment on the account, then 31st January, this date, you will have a cash flow hit. So plan it in advance. So of course, if your situation gonna change next year, if you say next year you don't think you have 5,000 tax bill, you have nil because you're gonna stop working, then what you can actually do is claim reduction on second payment on account. So it's really, if that's for you, I suggest you to do it, because you can avoid that cash flow hits and you don't have to pay the second tax bill by 31st of July. Okay, so if your situation is going to change, your tax bill is going to reduce significantly, and do consider that. But then please do speak to advisor about that, about your situation. So better be safe than take too much risks. Okay, so that's the personal tax, just a simple timeline. So what if you run as a limited company? I think for last couple of years, if you are, especially for contractors who are running through the limited company, they not just they don't have to pay, like they have probably up to around 32,000 like tax-free dividends, and then they don't have to pay second payment on the account at all. Perhaps after the tax return, it just simply file the tax return and they don't have additional tax to pay. But now, since the dividend tax rule changed, it's probably no longer the case. If you continue doing that, again, low salary, high dividend strategy is still good. But then one thing you might consider is the second payment on account. So do go back to this timeline. Of course, I will post on Facebook as well afterwards. Okay, so back to the company. Company, as said, is a separate entity, separate from yourself. So itself has its own deadline. It has its own financial year. So it really depends on when it is registered. So just give you an idea. So normally the financial year is still 12 calendar months, but it's not the natural calendar month. It's really when you start. Say, for instance, this company a financial year starts from 1st of April 2016. So it's not all the company will start from 1st of April 2016. You can start from 1st of May, 1st of June, or whatever, but then your financial year end will be 12 calendar months after. So if you're starting from 1st of April 2016, then your financial year end is 31st of March 2017. Okay, so when you have to pay this corporation tax, that's a company self-assessment. So that is 9 months plus 1 day after your financial year end. Okay, if your year is ended 31st of March, 9 months after that, that's 31st of December, and deadline plus 1 day, that's the 1st of January the following year. Okay, so here I think I would suggest you to still remember this 9 months, like 31st of December, because first of all, your requirement to company's house, like the company's house filing, is actually 9 months, not 9 months plus 1 day. So it's still better to remember them as in one go, and there's no harm you just file your tax, pay your tax 1 day before the deadline. There's no harm to it. So I suggest you still remember 9 months after the financial year end. Okay, I think for company tax at the moment is quite simple. I have no guarantee that the government might want to change the deadline at some point, but then this is what happens at the moment. Okay, so there are some cases actually. Normally it's very straightforward, but there are some cases like majority of cases, like if you register a company, you might not register from 1st of April. You might register halfway in April. Say, for instance, this company, especially the company first year, you registered from 6th of April 2016. Okay, and then what will happen is you will have a financial year end the 30th of April 2017. So that's actually slightly more than 12 calendar months. Okay, but then because the government wants all the company financial year ended at the end of the month, that just make it less messy. So if you started halfway through April, then you will be ended the following year, end of April. So in this case, you will have more than 12 calendar months long period. So it doesn't mean when you are filing a financial accounts to company's house, you will file one long period. But for the company tax, here we make it like a first 12 calendar months and the second period, CT1, CT2. Why we do that? Because the maximum period we file the company tax is 12 calendar months. We cannot even file 12 calendar months plus 1 day in one company tax return. So that's why we have to split them up. So CT1, CT2. CT1 is 12 full calendar months since you started. And CT2, that's the remaining couple of days. Like in this case, that's from 5th of April to 30th of April. So that's very commonly happen in the first year company. So what will happen here, there will be two deadlines you have to remember. So it's always by logic company responsibility for this filing, always remember 9 months after the accounting period. So CT1 period, that's 9 months after 5th of April, so that's the 5th of January 2018. And CT2, that's 30th of April. And then the deadline is 31st of January 2018. But here I would suggest if that's the case for you, always remember the earlier dates. That's always be earlier than better to be earlier than being late. So if that's the case, just remember 5th of January 2018. Remember the earlier dates, then file your tax and pay your tax, and that's it. Of course, by theory, you can pay the CT1 tax by 5th of January and the remaining period a few days later. So, but then it just make you aware what are the deadlines and what you have to be aware of. Okay. So I think these are what we're going to cover today. I think it's actually quite a lot of information to digest. Later I will post all these timeline and all these tax code, so you have the reference. But then because it's a very basic thing, it actually give you a lot more reassurance if you understand how the tax are collected and what are applicable for your situation. So I think it's important you have a thorough understanding. So that's why afterwards I have the quiz to be published. It just encourages you, there's no right or wrong, but I just want you to have a deeper understanding. Of course, I'm gonna look at it and give you feedback. And then if you do have any questions, please be free to let me know. For any participants for this quiz, I will give you a free copy of my ebook, my newest ebook. So that will include more like some more useful information about the tax strategy and how the tax works and anything like that. Okay, so it's just for all the participants of the quiz. You will receive a free copy of my newest ebook. Okay, so we covered tax code and the timeline and why some people have to pay tax twice a year. And I hope you find this episode useful. As said, today is purely for the earned income, like income tax, company income and personal income. Like there are other type of taxes like value-added tax. That's another different theory. So I think it's better I cover it in the separate episode because that would need a different brain. I know these things can be quite confusing. It's a lot of details and it changes most of the time. Like the self-assessments, the government is proposing them, like making tax digital, might want to teach the self-assessment, like personal self-assessment. So all these things are constantly changing, and I know it can be confusing. But then if you do have any questions, be free to let me know. And also, if you are watching it through YouTube, please subscribe to my channel, and you will receive the update, and I will post all my episodes on the YouTube. Okay, so I hope you find this useful, and if you do have any questions, be free to personal message me. And also we have a private Facebook group. It's called Tax Deductible Lifestyle Tribe, and we have more in-depth guidance about money and tax. And in particular, I will have my personal insights because we have our own private Q&A, so that will be answering more specific questions. So that will be happening every Wednesday at the moment. And also we have our panel of experts. So not just me as accountant, we also have financial advisor, we also have other consultants like for business or for investments. So you can always also connect to them as well. Okay, so I hope you have enjoyed this episode, no matter you are watching replay or you're watching live or you are watching on YouTube. And I hope you have a wonderful, wonderful evening, and I shall see you soon. Bye now.